You have insights on like the local labor market. What sort of tips or advice would you give?
I would say you don't want to pay too little. When people are not paid well, they're less inclined to work hard and deliver, good results. Your relationship with your cleaner is so important to your operations, to your reviews, to the guest experience, and to the continuity of your business. In the end of the day, a missed cleaning, a poor job is going to, sink your real estate investment.
Welcome back, everyone, to the Learn Like a CPA show. I'm your host, Ryan Bakey, live in Nashville for the STR Wealth Conference, 3-day, 4-day event, depending on who you ask. It is the #1 conference for short-term rentals, and I'm joined today by a special guest, Assaf Karmon, the founder of Turno, originally Turnover B&B, and we're here to kind of pick his brain a little bit today. You're speaking at the conference, right?
I don't think so.
No?
But thanks for having me, Ryan. Yeah.
And so you had just told me something. Let's start off with the background. Like, what was the vision of Turno when you originally started it?
Right. So when I started Turno, I was hosting. Just found it incredibly difficult to juggle all the schedules of the cleaners and the guests, and being a software engineer and kind of a product guy. I had this aha moment of like, I can't be the only one who's struggling with this. So I decided to make an app that would solve it once and for all. Little did I know how much work it was going to be, but nonetheless, I started it, and I think we solved that problem, but then we figured out that there were more interesting things to work on and more problems to solve in the industry. So we went from scheduling to having kind of a marketplace where you can find people to turn your properties. And we're thinking bigger of just making it so completely seamless to operate your property anywhere in the world, from cleaning to maintenance to staging to everything that goes into it.
And you had said that it was you were hosting first, so you had a couple of properties and you were struggling, and then was it an app for yourself first?
Yeah.
Like you had made an app just for you?
Yeah.
Or kind of Zapiered it all together? Or?
No, I'm a software engineer. I can code, right? So I just wrote it from scratch.
Mm-hmm. And so you had told me something, and this is what I already like about you, is that it's not just the problem that gets solved, but what other problems are my guests or my customers having that I can also solve?
Exactly. And
so you had told me, talk a little bit about your first customer, because it sounds like you worked for free for a while. Can you talk about that?
Yeah. The idea came to me, and I made the app work for me. And then I had enough confidence that it was useful enough. And I just put it out there. Hey, it's free. Use it. I was posting on forums. Use my app. And I remember I went on vacation to Japan. And I made it available, but no one had signed up yet. And I woke up in Tokyo, and I was like, opened my laptop just to see, what happened. I was like, oh my God, we have a user. This is really exciting. A user, one user. I think it was this lady from Colorado. Like, her account ID is #1. And
is she still a customer?
I think she is. Yeah.
Oh, nice. And so it was a free app. Or it was a free first, right?
Yeah.
But nobody signed up.
Well, there's always a period where you launch your app and no one's using it. I bet there's someone on Airbnb who has an account ID #1, that thought, oh, that would be cool to rent someone's house. I mean, yeah, let me try it.
So that first customer, you had learned from that, because you said that you didn't charge at first.
Yeah.
Yeah. And then, did you start in a certain market for cleaners, or like what city? Did you focus on a specific city first?
No. So the general problem was of scheduling, and that works everywhere. You just need to, you invite your cleaner, and then you get automatically scheduled, and that works everywhere. It wasn't for another year that we launched our marketplace, where there's really like location to it.
Let's talk a little bit about the software. So I have 8 properties, different markets. So how would a guy like me use that for all properties if I wanted to?
No problem. So you go to Turno, you link your Airbnb account. Now we have an official partnership with Airbnb. It will pull your 8 properties into the system. You would invite your cleaners. They would get an SMS, hey, join me on Turno. We'll work together. And you say which cleaner works on which property. Then whenever a guest books your place, it would generate a cleaning project that would get sent to your cleaner. They would confirm that they were going to work on it. You can create a checklist for them so they know exactly what to do. They can upload pictures. They can track inventory. They can create problems if you have any. And then it's just really seamless to, work with your 8 properties, which, there's people with 254 properties. They use it. There's people with 1 property that use it.
So, but you could link your Airbnb account for all your properties. Yeah. And then what is the hardest part? Is it getting the properties to clean, or is it finding the cleaners?
I think at this point, there's a lot of awareness from both cleaners and customers about Turno. And it's really about managing the product so it doesn't completely favors one side or the other. Think in Airbnb, like you have the guests on one end, and you have the hosts on one end, and you can make the guests completely happy, but then that comes at the expense of the host, and you can make the host really happy, that comes at the expense of the guests. In the end of the day, there's always a little bit of a tilt towards the direction where the money is coming from.
Yeah.
Because in the end, that's a business. But there needs to be a healthy tension where you make sure that both constituencies are satisfied and get value.
Mm-hmm. So when you had first with the app, it was just every city, any city?
Every city, any city.
Okay.
It was quickly like kind of all over the world. It wasn't until a few years later where we started adding, customer service and kind of localization in the product to support other languages. So now we support English, obviously, Spanish, Portuguese, Italian, German, and French.
Mm-hmm. Well, you have insights on like the local labor markets, because we were talking a little bit earlier. What sort of tips or advice would you give somebody that's maybe in Florida versus Texas versus the Midwest versus California?
I would say you don't want to pay too little, right? Mm-hmm. Like you might be saving $5 an hour, but when people are not paid well, they're less inclined, first of all, to work hard and deliver good results, but also to show up, right? If they can drive an Uber and make more money, then they would do that. So make sure that you're paying your people well, and take care of them, and they will take care of you. Because in the end of the day, a missed cleaning, a poor job is going to, sink your real estate investment. So you don't want to do that.
Yeah, I see so many Facebook posts, like people would talk, I have a cleaner, done really well, I want to give her Christmas bonus. I don't know if I should give her $50 or $100. It's like, why are you even posting that?
You should give her $100, I would say.
Like,
yeah.
So, but it's something important about taking care of those people that are helping you run your operation, right? I mean, that $50, it must seem a lot to the host, but it means more to the cleaner who's getting it than the host of the property, in my opinion.
I absolutely agree with you. And listen, if you're in this business to stay.
Real quick, guys, if you could think about how you found this podcast, maybe it was on Facebook, Instagram, maybe somebody shared it with you. I don't run ads for the show or have sponsorships, so the only way this grows is through word of mouth. If this was valuable for you in any way, the only ask that I can make is that you share it with somebody else. Pass it on to the next person whose investing journey or business can be changed by listening to the show. Much love, guys, and let's get into the episode.
If you're in this business to stay, if you have a long-term vision, save elsewhere. Right? Your relationship with your cleaner is so important to your operations, to your reviews, to the guest experience, and to the continuity of your business. Like if if someone doesn't show up and you have a guest come in and you get a bad review, it can really snowball into you making a lot less money on your property. So I'm not saying overpay, but don't be too cheap.
Something about the cleaner. Do you recommend? So for me, I've had individual cleaners and I've also had cleaning companies, and I just find with the cleaning companies that there might be 3 or 4 cleaners, but they're always not trained the same, or they're not on the same page. So do you? Because if I have one cleaner, it's one direct sort of report, and I know the quality of that work versus a cleaning company, I might get something different each time. Do you recommend one or the other?
Well, it really depends. What we do in Turno is we try to kind of put every cleaning company or individual cleaner kind of in a straitjacket. Mm-hmm. So we have a checklist. You can create a checklist. It could be very detailed, and it should be very detailed. And it allows you to require a photo for things that are important so that you can stay on top of quality. So if anyone walks into your property and there's a really good checklist that tells them exactly what to do, the chances are that they'll do the kind of work that you want done, whether it's a cleaning company or an individual. I would go out and say have multiple people trained on your property. So if you have one individual cleaner, make sure you have a backup cleaner that you give work to every now and then, and they're trained on your property, and that would reduce chances of a misclean or a poor job, right? Because if someone can't show up, and it happens, people's car break, people's kids get sick, parents get sick, people are on vacation too. You want to make sure that there's someone else that you can turn to. Even 3, cleaners trained on one property is not uncommon.
Mm-hmm. So you said something there about potentially the kids getting sick, and that was one of the things that I, at least for one of my best cleaners, I had asked her, like, what do you value the most out of, like, what do you want to get the most out of work? And she just said, I want to be able to drop my kids off from school and pick them up. It's like, okay, we can make that happen. How can I schedule the check-in and check-out around that? And that could be worth way more than money. Like paying them an extra, like I would still pay them more money than I would still pay above market value, but then to go above and beyond and listen to what they want. Like, what do they want to get? Anytime I hire a new employee, I always ask, what do you want to grow? Like, how do you want to grow and get out of this more than just from a monetary perspective?
Yeah, I think people really value flexibility, which is why people go into, short-term rentals. You manage your own schedule, you grow as much as you want to grow. And it's the same thing with, cleaners on Turno. Like, they can go and they can find customers and kind of build a little independent business. They could actually not be so little. We have cleaning companies on Turno that, I see the amount of money they're making. I'm like, oh, I'm in the wrong business. I should be cleaning, not making software. So it's nice to be able to build that business for yourself that gives you the freedom to do the things that you want to do in life, which is, be the one to pick up your kids from school, or, play golf, or, fly a plane, whatever it is that you.
One of the biggest questions I have is how do you vet the cleaners potentially?
So we have a marketplace that drives accountability, right? So as a cleaner, you work with customers, you get reviews from hosts. You also get reviews from guests. So through our partnership with Airbnb, we're now able to pull the cleaning portion of the guest review and kind of assign it to the cleaner that was responsible for that stay. Right? So you build reputation over time, and then when someone is looking for a cleaner, see, oh, there's someone, this cleaner did, 1,000 projects on Turno and got hundreds of guest reviews, and they're fairly positive. Now, you can't expect someone to have like a perfect 5-star review from everyone, because life happens.
Yeah.
And sometimes people are unfair in their reviews. So you want to kind of get a holistic view of, okay, there's like a really good number of positive reviews here and positive sentiment. So you can choose that person with really high degree of confidence, which is really what we're doing here. right? When you build a marketplace, you build a network, the value you provide is just giving people visibility into what's good, right? What does the Airbnb do, right? Why do people choose Airbnb over a direct booking for the most part? Is because they
Trust.
know that there's trust, right? Other people said this was good. If they're going to mess up, that there are consequences. They're not going to just disappear with my money, right? It's the same thing here. If you pick a cleaner from Craigslist and they don't show up, there's no consequences. Mm-hmm. They just like don't answer your phone and that's it.
No skin in the game.
No skin in the game. But if they are invested in Turno, they have multiple clients on Turno and they ghost you, then they're really hurting their own business, right? It's very difficult to recover from that.
So you said something about the host and the cleaner, the host of the property and then the cleaner, trying to make that not as transactional. Do the hosts have a review score?
Yeah, so cleaners do provide reviews against the host side, and right now we use it internally to sort of weed out bad hosts, because there's those two people who are kind of abusive and difficult. Some people have like really unreasonable expectations. A cleaner will not fix, like, is not a plumber, right? And is not a property manager.
Yeah.
Right? Like they won't be there in the middle of the night. They're not going to be there if you don't give them proper notice. And so this, it's the kind of value you want to provide to our cleaners, is like, we don't want to send you kind of very difficult people or abusive people.
Do you have a case study of a client kind of that just started maybe 1 or 2 properties that has ascended to, 10 plus properties?
Oh my God. Our entire customer base is like that. There's people who started, they were doing 1 or 2 properties. They figured out, oh, wow, I can really offload all this work, all the scheduling, the payments, the vetting, to the point where I'm almost not doing a lot. So I can add more properties because it's not hurting my lifestyle. It's not creating, a burden. I don't have to hire a person, that creates overhead. It's very common. So once you figure out, oh my God, I can automate, I can streamline, and take all this burden off, then you can really grow.
So when I talked to you yesterday, it sounds like you like the tax code a lot too. What most intrigues you about it?
Yeah, so it's funny. I was just, talking with some friends, that have kind of a high W-2 income, and they're like, oh my God, it's tax season. Like, I can't believe the amount of taxes I'm paying. I was like, why don't you buy a short-term rental and use the bonus depreciation to offset that. I'm sure a lot of people, everyone in the industry is aware of this, but a lot of people who are not in the industry are not aware that you can do it. So you have people with high incomes, doctors, lawyers, they're paying so many, like their income taxes like through the roof, and they can really offset that with, this little tax loophole. And now it's going away in a couple of years, but now's the time to do it.
What you said right there, though, is now that like a lot of people in the industry know it, but they haven't always known it. Like, I remember the first time that I publicly talked about cost segregation was at a boot camp of 100 people. It was Bill Face boot camp in Nashville. It was like 2020, I think, 2021. And I had asked the crowd, I was like, hey, how many people here have heard of what's called a cost segregation study? And 4 people out of 100 raised their hand.
Oh my God, yeah.
And then it wasn't but a year later when I spoke here the first time in Nashville, this would have been June 2022. I asked the same question, and 800 people in the audience, and almost all of them raised their hand. And it was really like a mass adoption in about a year of how long it took me and a few other CPAs and people to start posting about that content. But one of the limiting beliefs I think that I had when I was doing like educating people is that,
hey guys, just want to interrupt the podcast to let you know that if you enjoy the podcast and the content that's in it, you would love my Tax Strategy Academy. This is going to give you the framework for developing all your tax plans for the entire year, whether you're a long-term rental, short-term rental investor. You're going to get a one-on-one call with me to map out your tax plan, and you're going to get access to weekly office hours where you can come and ask your personal questions. So if you're interested in learning more, go check out the link in the show notes below. And now back to the show.
one of the limiting beliefs I think that I had when I was doing like educating people is that I talk about stuff every single day, and I think that everybody else knows what I'm talking about because it's like common sense to me. But what you just said is there's people that have high W-2s that already own properties but still don't know that they can offset their W-2. And
It's almost too good to be true when you think
there's
about
a lot
it.
of people that enter the industry and don't know. And so that's why I always, and even, me and Peter were talking about this, but after a year of posting content and doing podcasts and stuff, I thought I was like, oh shit, I'm done. Like I've said everything I need to say. But sometimes you have more people that enter the ecosystem of whatever it is you're doing. So you need to just talk about it more. Sometimes people need to be reminded more than they need to be taught. And so it's just about keep talking about it, maybe explain it a little bit differently, but
It's probably one of the most generous kind of tax laws out there. I think this year is 60% bonus depreciation, which is still great.
yeah, for high income it is.
Yeah.
Yeah, I mean, I think, if you're high income, decent size purchase price, it makes a lot of sense.
Yeah.
Yeah, there's a good chance it goes back to just full 100 till the end of 2025. We'll see, fingers crossed. But if it does, everybody will get rich and save a lot more money.
I don't know kind of the rationale behind this tax law, but use it while it's there.
Well, yeah. See, I mean, Congress wants to incentivize economic behavior, and so they want people to invest money into businesses. They want to invest money in the stock market. That own businesses, and then they want people to invest in real estate. So Congress writes the tax code to incentivize that certain behavior, and one of the things is bonus depreciation. So it gets investors to spend money. Now, from a economic side of it, I don't know how they're bringing back 100% bonus depreciation because this last couple of years they've been raising interest rates to curb inflation to like get people to stop spending money as much, and it just hasn't. It hasn't.
Yeah, I mean, sometimes the left hand doesn't know what the right hand is doing. Kind of, this is a classic situation of like, on one hand, like you're encouraging people to buy real estate. On the other hand, you're like discouraging people to buy real estate. And this is a big system, and you kind of have to ride the waves that work for you. But I mean, if you think about the entire concept of depreciation in real estate, even without the bonus side of it, it's still like a massive benefit of owning real estate because it's not really depreciating. It's not going away, right? It's a tax write-off that exists. And people have been taking advantage of it for years.
I mean, typically like long-term rentals, for example, it'll be normally 5 to 7 years before you actually show a tax profit on a long-term rental, a traditional long-term rental, because the first couple of years you have a lot of interest. But after that 5 to 7 year mark, they will actually start cash flowing. But with short-term rentals, because they make so much money, you're showing a tax profit from day one. And so it's more favorable to want to accelerate the depreciation on short-term rentals, not only because of the cash flow reason, right? Because otherwise you're going to pay income tax, but because you can use it to offset your W-2, it makes it even more likely that you should do it.
Yeah.
Also, too, short-term rentals, they depreciate on like a slower schedule than long-term rentals do. And so you want to speed that up a little bit. So it's just another reason to want to do a cost segregation study as opposed to not. Now, it's not for everybody, depending on your income, purchase price, and then your future goals. Some people shouldn't be accelerating the depreciation. Like I talked to some people that for whatever reason, let's say they didn't work all year, but they somehow bought 2 properties. I'll never forget this. The first year I did this, there's a guy, he had like a $40,000 W-2. And somehow he bought 3 cabins in the Smokies. And somebody told him that he was going to get a $150,000 tax refund based on all the properties that he bought. And so when we filed his tax return, he only got $2,000 back because that's what he paid in to the 40K W-2. And he's like, man, somebody told me I was going to get 150K back. And it was just not an understanding of what's going on, because you only see the 30 seconds of the hour-long podcast, but you need to understand that what exactly is going on. I think some investors don't.
Yeah, no, I mean, you can invest without having a huge W-2 income, and then that really doesn't apply to you, the bonus depreciation. But I think the classic use case of this is like, physicians, kind of, senior executives that, on paper, oh my God, they're making so much money, but they're also paying so much in taxes that they could really benefit from this.
Yeah. Or the last use case too is if you want to do something with your retirement money. So we'll have clients, let's say they leave their job, they want to do something with that 401k, whether it's they want to self-direct it and buy real estate or they want to convert it over to Roth. That's a really good year to do that, especially combined with depreciation from property. So there's a lot of things that, it's not just the cost segregation study, but that might lower your tax bracket enough to where you can do other strategies, other ideas. Like with your retirement account money, capital gains, because it's not about how can you save the most amount of money in taxes in 1 year, but what about the rest of your life, like over the course of your life that I try to push.
Yeah. But this year it's 60%. The following year is going to be 40% and 20%. So if you're going to do it this year. And, like a shameless plug, with Turno, it's easier to run your property and manage it yourself. It's very important that you manage it yourself, because otherwise you're not getting that.
We'll say that for a different podcast.
No, it's true that, there's the material participation clause in that. You have to do it yourself. You can, if you give it to a property manager, you're not qualifying to get that tax refund. So you have to do it yourself. And if you're going to do it yourself, save yourself some time and, use Turno. Where
can listeners of the show find Turno?
We have a beautiful 5-letter domain, turno.com.
And then what if they want to reach out to you directly? Are they able to do that?
Yeah. Find me on LinkedIn. Just mention that, you're from the podcast, and I'm happy to talk to you guys individually.
Well, thanks so much for coming on the show today. It's been awesome.